I get asked all the time about property taxes in Florida, and most buyers feel that the tax listed on the MLS sheet is what they're paying for their property taxes, and that is what they're going to base their monthly costs on. Well, for the most part, that is a big fat no. In this video, I am going to explain in a simple way to understand about our property taxes here in Florida and the advantages of living in Florida and what Florida has to offer to permanent home owners. Well, I'm Maria Wells, and if you like this video, please remember to subscribe and hit the bell to receive my weekly videos on all sorts of real estate information. By not understanding what occurs when a property is transferred in Florida could place you at risk of not being able to afford the monthly fees when taxes are added. Well, this is when I highly recommend you discuss this in detail with your realtor while you are in the beginning process of a home search so that you are well aware of what the costs might be. I even receive calls from lenders who will use a tax number off of an MLS sheet, and I will tell them not to use that number as it's going to change. Well, buyers have been asking why are property taxes rising in Florida? Well, that's because our taxes are based on the value of the home. Generally, your taxes are about 2% of the sales price, but that's not an exact amount and certainly not written in stone. But when a buyer asks me what the taxes are, I will always say, let me go to the property tax website to provide you an estimate, because there are so many variables to calculate, such as, number one, how long has someone who currently owns that home lived there? Because with Florida homestead exemption, or we call it Save Our Homes Act, the owner may be paying a base rate from when they purchased a home maybe 20 years ago. You may want to watch this video on what is a Homestead Exemption Act for further details. Well, from that point in time when that owner bought that 20 years ago, they would have each year possibly up to a 3% increase in their property taxes, making that their tax rate and much lower than, let's say, their neighbor who just bought the home next door possibly a year ago, because they will be paying at actuarial rates. Number two, the current owner may have taken advantage of the many exemptions we have with our Homestead Act, making their tax liability lower than what yours would be. Number three, is this home you're purchasing going to be a second home or a third home? Well, if it is, your tax rate will be different too. You can't take advantage of the 3% increase. However, the good news is that in Florida, if you do have a second or a third home, as a homeowner, you will have a cap of 10% a year for your taxes. And that goes a long way with the rapid increase in home prices. So that's really a good thing. Number four, there are other taxing districts that are called CDD, which stands for Community Development Districts, where taxes will be higher for you to pay. That's in addition to the property taxes. Those taxes were done to help with infrastructure when that area was developing, because they needed to have the extra money to do what they needed to do. So you will find this in many areas in, let's say, St. Lucie County. Well, taking these four items into account goes into calculating your estimated taxes. So that's why I say, do not look at the taxes on MLS what the current owner is paying. At the time of sale in Florida, the new owner has the opportunity to finish out the year at the tax rate the current owner pays. So real estate taxes are paid in arrears in Florida, and when we pay them in November, that's a payment for the current year, and we get to enjoy having a discount if we pay it early starting in November. However, come January 1st of the following year, Florida law provides that the property must be reassessed at full market value in the year following the sale. So let's talk about that. For example, you purchase a home in June of 2023. You pay taxes through 2023 to the end of December at the rate of the current owner. On January 1st, your property is reassessed at the current rate for property taxes, and you will pay that all of 2024. Then you you apply for Save Your Homes by March 1st of that year in 2024 so that you will have the homestead exemption begin on January 1st of 2025. That's when your reductions in taxes will happen, and there will be a 3% cap which begins on your taxes and are reduced from what you paid at full price in 2024. Now it sounds a little complicated, but basically you have 1 year of actuarial rates until you can apply for homestead tax exemption. If you have any questions on that, just place them below. Well, you can visit the property appraiser's website to get an estimate, for instance, the Martin County tax appraiser or the St. Lucie County tax appraiser. The reassessment typically isn't at the actual sales price, but it comes in at about 85% of what the home sales price was, and then the reduction when you apply for homestead comes off of that. I often tell buyers to estimate about 2% for their tax rate. Also, everyone in Florida has their properties reassessed as of January 1st of every year. Well, we also have what's called homestead portability, which allows you as a homeowner to take some of your tax savings to a new property if you're deciding to move. That can also be calculated on their websites, or the easiest thing to do is call your realtor to be able to really understand the entire process. You might be really surprised if you've lived in a home, let's say 10 years or more, how much tax portability you can take. Well, I know this is a bit complicated, but hopefully this simplified explanation helps. So remember to subscribe and hit the bell to receive my videos released weekly. And if you have any questions, please write them below. I will always get back to you. So let's go to this video for more helpful information on this subject. And until next time, see you later.